The big event in the market today, Netflix going ahead with a bold deal to acquire the streaming and broadcast assets of Warner. Let's get more from Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, always great to talk to you. What do you think? There's a lot of talk that Netflix will face political opposition with this deal. They'll have such a grip on the show business industry.
Yeah, I mean, Hollywood is slowly becoming, few players in a big town. The antitrust issues that they are going to face moving forward on this, both domestic and in Europe, is going to be a pretty strong headwind here. Yes, this is a overall positive for the markets, right? We like to see M&A activity. We usually start to see a few big deals towards the end of the year as books start to close. This is a major deal. Netflix is normally a build-it-yourself company, right? Think about where they started and where they've gotten to today. And the fact that they have decided to make this large acquisition is quite outside of their comfort zone. So I think overall, the concepts, the ideas are very good. But again, going into this, they were fully aware of the fact that they're going to certainly hit some headwinds from the antitrust monopoly issues that will certainly be brought to the forefront. This is going to take quite some time to get this deal done. I think we're going to start to see a lot of volatility in both stock prices if there is this continuing inclination that this deal has a possibility of not getting done. So, it's going to be fun to watch this thing play out.
So we're awaiting that Fed decision this coming Wednesday. Your gut feel, is it going to be a cut?
All things are indicating that we are going to see a 25 basis point cut. But again, it comes down to every single meeting. It's not really what they're doing. It's what they say afterwards, what the Q&A is, what indications we might get from them. If you go back 2 weeks, there was some rumblings about maybe they're going to pause. We did have a sell-off on the market, some comments that came out of some Fed chairs and some economic data. Turn that around rather quickly. We've seen the market rebound since then. The market is pricing in this 25 basis points. But again, it's going to be the rhetoric. What are they going to say about moving forward? Is it the same script? Is there a couple of words, a couple of sentences that are going to shift? So I think the market's feeling, we're seeing the activity that we're seeing now due to economic data, due to M&A activity, due to the pricing into the Fed. But what happens after that? And then after that, we kind of continue into this holiday season. Less activity, less volume, could add for a little more volatility. We'll see if we see that Santa Claus rally or if that's been priced in already.
So as we approach the end of the trading year, do you think there'll be any inclination among portfolio managers to say, I've made a lot of money on some of these tech stocks. I'm going to lighten up. I'm going to book some profits?
I think we might have seen some of that already. We might see a little bit of it, but I don't think we're going to see, quote unquote, booking profits. I think we're going to see this market stay at these levels where we are for the next 2.5 weeks to make sure that the end of the month, end of the quarter, end of the year returns stay somewhat intact. But keep that in mind as we get into 2026. If we continue to see these higher valuations, we're going to continue to have these conversations of what's going to make this market sell off, where's the fear, where's the catalyst. We might start to see some profit taking coming off the table. But when that occurs, these portfolio managers aren't going to sit on cash for a long time. They're going to have to find other areas or stocks to start implementing this. So when we see volatility in the market, like we saw 2 weeks ago, I think you saw an opportunity there for individuals and portfolio managers to get some cheap prices in a very short period of time.
One stock you're watching is the beauty player Ulta. Does that stock look reasonably priced?
It does. Listen, I'm married and I have 3 daughters, so I've seen plenty of Ulta receipts come across my desk for the past few years. So this one to me is not surprising. The focus on health and beauty continues as investors, as Main Street purchasers still fight inflationary fears. They still fight discretionary spending. But it seems at this point, investors are clearly and purchasers are clearly focusing on this area and committed to this area. I think some headwinds that Ultra might find is that as this cosmetic area, as this health and beauty area continues to grow, you're going to get some of the big boxers, the Walmarts, the Amazons of the world pour significant amount of money into investments into this to try to catch up and get on the radar screen there. So there certainly might be some headwinds there for Ulta, but for the time being, with their forecast moving forward, it seems like there's potential upside there.
Jonathan, we better leave it there. Thank you very much indeed for joining us. Have a great weekend.